what I want to talk about today is how to quickly spot strength and weakness, then we can get back to the markets and trading in case you guys are worried about missing something. Last week I didn't record the session and post it. This week I will. So that's why there'll be a gap in the sessions between last week, 2 weeks ago, and this week. Either way, I've got two charts up. They're line charts. They're simple 2-minute line charts of the E-minis up top and the German DAX down below. Why is the German DAX important? Well, the second half of the European business day is the first half of ours. When I started trading this and the Euro stocks were the two markets equity traders in my firm traded. So they were influenced by the U.S. and sometimes vice versa. These markets were part of the reason why electronic trading came in so fast into this industry, because there were viable markets that were put on the screen that were tradable. Euro stocks, DAX, and Boon, Bobble, Shots, the five main markets of Eurex that pioneered electronic trading and everything else followed. Going over, comparing the two, it would make sense why they're going to chart similarly. They're both equity indexes. Obviously, the DAX, I believe, is 50 German companies, more of a tech-heavy sector like the NASDAQ. It's 25 euros a tick, and it moves. So it's much thinner than the S&P. But when it moves fast like it did today, and for those watching on recording, it's, what is it, April 11th? It's April 11th. Look back on a chart of the DAX and the E-minis. You're watching this in the future, and you could see a pretty distinguished sell-off in the DAX, which is charted here at the bottom of my screen. Now, what I'm going to show you guys is with lines in here. I'm going to mark that with these purple vertical lines. At the same moment in time, this market makes those highs at the top of this vertical line, just after 8:30 Central Time or after our open. Now, if you put a horizontal line off the tops of all these peaks in here, you could see when the DAX breaches it. You put a horizontal line up top here, way at the top of my screen share, you could see where the same highs were being put in the overnight session in the E-minis were not breached here. You see how they fall short of this horizontal purple line? And yet the DAX breached theirs, and the DAX breached it right there, right at that intersection. So right in that moment, when you start to see the DAX making those higher highs, it's a head-scratch moment to say, hey, the DAX is stronger than the U.S. or stronger than the ES. Why? For this very reason. It's making new overnight highs. And yet the ES, if you remember this morning, opened up and shot lower. It made new overnight lows very quickly and then spun around. And one of the reasons why it spun around was with help of what was strong out there. So now you kind of disseminate. I was planning on doing this. I came up with this over the weekend. Last night I was playing around with these charts from home. And then, so I was planning on doing this before today and before this example set up this morning, because this always happens. A way to distinguish quickly strength versus weakness. And I did a recorded short video of this in track 3 that you could watch after this session. But this isn't just a refresher, because this is always happening, and I think a lot of people miss it, including me at times. And that's why it's important to be around other guys with more eyes and ears on things that matter, and this is one of those things that matter. The other thing I want to say, and I just thought of this the other week, and I think it's something you'll hear me say a lot going forward, is, let me write this down. This is totally off topic, but it's important in the whole process of getting and staying better. Anytime you're learning to do something, and in this business, you never stop learning. So no matter if you're having success and been having it for a while, you're still learning. Now, those that haven't had success yet, think they turn the corner and then they don't. They're doing better. Maybe they're not losing money, which is success, but they're still struggling, and there's people like that also. You got to remember, when you're trying to learn something, there's two things. There's things that are going, that people, let me turn this guy down a little bit. There are things that people look to learn that they think is going to make them $1 million. Now, what out there am I going to be able to buy, invest in, get, learn that's going to make me $1 million? And that's the absolute wrong thing to look at it. I know that's the way being a human makes us react, the path of least resistance. What's that indicator? What's that tool? Or what's that one thing that's going to get us over the hump? Keep looking for it. Instead, I want people to look at eliminating the things that are keeping you from being successful by not knowing. And I kind of said this, I think, a week or two ago with the quoting exercise. That in and of itself is not going to make you successful, but it's one less thing keeping you from being successful. So start eliminating the tools and the steps of the whole process that's keeping you from being successful. You learn a tool and you understand it, it's one less thing that's keeping you from being successful. Just think of it as learning how to operate a pretty complex tool. There's different things you have to understand. The first thing is to know when it's not on and when it is on, right? But you get better and better at that very complex tool by learning different things that when you pull them all together, you've given yourself the best chance. So stop looking at that one thing up here that's going to make you $1 million. It's going to be one of these things in here that's going to get you successful. It's just the process of eliminating them. Intermarket relationships and watching other markets and getting great at it is one of those things that if you're not completely successful and you don't understand, it's one of those things keeping you from being successful. Hopefully I said that well enough for you guys to understand. Don't look at the one thing that's going to get you successful. Start eliminating everything that's keeping you from being successful. Thanks, Peter. Peter just said, coming off of Trade the News, that U.S. sovereign rating of AAA has been affirmed by Fitch. Outlook stable. Technically, that's bullish. And we've walked up a little bit in here. So, market relationships to another market relationships to the news. All right, so let's go back to this. Intermarket relationships, how to know when something's strong and how something's weak just by comparing two markets. That's it. So we know the DAX early this morning, before we know this big move lower, we know the DAX is stronger than the ES. All right? Why is that important? Well, number one, it pulled the ES up after the first 5 minutes of today's session. Remember we had that long down up bar? Number one, the DAX is what would have kept you getting stuck too early trying to be short the ES. Secondly, when the strong one gets weak, that's usually great timing for the weaker ones to really get weak. So think about that. If the S&P and the NASDAQ kind of are weak, all right, and they want to go down, but there's one outlier, the DAX, that's strong, that wants to go up, it's going to make it tougher for the weaker ones to do what they want to do. But when the strong one starts to curl over and get hit, it should be an easier path below for the ones who want to go down anyways. But without comparing these two, it's tougher to say anything about, if you just looked at this chart up here of the ES, to say that it's weak or weaker. But that's not hard to say when you're comparing it to something else. Same damn thing as if you're comparing a dealership to a dealership. Hey, this price is expensive. Well, how do you know? This guy down the street's cheaper. The guy down the street's cheaper. How do you know? Because the guy down the street's more expensive. Oh, okay. That's pretty basic in trying to find value in the price of a car, but it ain't basic in this, and yet it should be. It is for me, and it should be for all of you guys. And it is for some of you guys already. So why is, again, this important? Number one, showed us some upside after the first 5 minutes after the open ES. And then if you remembered in the trading room today, there was a moment in here that I'm drawing in the DAX chart, that yellow rectangle. And if you guys were listening, you heard me say it. The DAX has finally joined the party. They just got hit. I know some of you guys remember me saying it because some said they got short on it. Not only was the DAX getting hit, but the son of a gun was the strong one, and now the strong one is no longer strong and starting to weaken up. If you're bearish already the ES, you're looking for a win moment, and you're watching a strong market get weak in a particular moment, if that isn't the slap in the face to sell the hell out of the bid or take a shot, then nothing is. Go become a plumber. How do you know it's the strong one? We just went over it, right? Made higher highs when the rest of the complex didn't. How do you know it's coming off? Because I'm watching it. And it came off fast. If I didn't run through that progression in my head, then I'm not going to be in a position to read it and say it. You guys aren't, if you're not listening, you're not in a position to listen and able to absorb it. And if you're not watching it, you're not going to put yourself in a position to be able to take advantage of it. But it's all just taking these two moments and being able to say, something's off here. So let's go back. Let's get rid of this. Let's get rid of this. Let's go in here. This catches my eye. And it did this morning. Right before we left the room, I'll put the vertical line on the same. Take a look at that. Does that look strange to you? Let me open this up a little bit. There. What changed here? Look at this market rally. Peter, did you catch that? I hope people caught it on that. That was a real good. You didn't necessarily have to be bullish, but if you were bullish and didn't buy it on that reaffirmation by Fitch that the U.S. is going to maintain their sovereign rating of AAA and the outlook is stable, then nothing will. Another good correlation. To read deeper into this, the U.S.'s AAA rating is underpinned by the sovereign's unparalleled financing flexibility as the issuer of the world's preeminent reserve currency, accounting for nearly two-thirds of the global reserves. The economy is large, rich, and diverse with GDP per capita. It just goes on to shower the U.S. economy with compliments. Let's get back to this. He caught it. So he's able to do two things at once. Listen, trade. Nice job. Now, where did we rally? It looked like from 40 to 45 so far. Either way, let's look at this vertical line that I put here. DAX at the bottom, ES still at the top. What is different? I'm going to show you what's different. Look at this line that I'm going to put right here. You see how I placed it right on the low? So this same low, if I go down here, is down here in the DAX, right? So let's place a horizontal line on that. Interesting that look at the difference in the test. See how the test here almost makes a lower low, but yet the test here is really far away from its low? And I said, going into 10:30, I said it's going to kind of be the opposite of my call yesterday at 10:30, where it was going to get bearish below 52 I think it was 52. I can't remember the price. 57 maybe, and it did, and it got real weak. So this is kind of bullish to go up, at least momentarily, because the DAX isn't nearly as weak as the ES and the US was trying to test the low, so be careful being short. How do I know that? Because I'm comparing and contrasting. This latest run up from here had to do with that Fitch comment, but it kind of just pushed it right where it wanted to go anyways. So while we're super weak in here, you got to respect a bounce, because we don't stay weak forever. That's what gets other people in trouble. They want to be weak. They want to see a direction for the rest of eternity, because it makes it easier. That's why, ooh, the trend is your friend. The only reason why that's a saying is because it rhymes. Trend is not your friend. Unless you're good at getting on the trend at the right time. Good win moments. There's a couple other things, examples I'm going to show you. But if you throw in your vertical lines, you're going to see the difference between how far you are from the intersection. Look at this intersection in here. They're right on it. Look at this intersection right in here. They're not. They're not even close. Starts to make you question the weakness in this market when this guy is so much stronger. That's all. All right, now let's go back a little bit. Let me get rid of this line. Let's bring in our NASDAQ, our friend the NASDAQ, all right? These vertical lines are global, so they're going over both markets at the same time that they were trading, right? So let's go back, and this is a way to kind of review, and this is what I was just flipping through last night. And I take this down here, and I know when the vertical lines go together that we're in the same moment of time, right? And I look at this, and a couple things spotted my attention, and it's this one right in here. If I were to set this vertical line right here, and I would create an intersection with the high that it's breaching, bam, it's right on that intersection, that axis, right? But look at this one. This one, which is the NASDAQ up here now, is not far away, but a little ways away. Does it get you to sell the ES? Sometimes yes, but just not on a whim. But it gets you to understand that the NASDAQ is slightly weak, and this guy might be overbought. Now, a question everybody's going to ask is, or think, do you sell the weak one? Is the weak one going to pull us down? Or is the strong one going to pull the weak one up? Usually, in this case, in the divergence, the weak one is showing you that indeed it's weak, and the stronger one is showing you it's maybe expensive. In that case, the downside's the right side. That's generally the case with these divergences, with trying to identify strength from weakness. The ES is slightly stronger than the NASDAQ based on this correlation. In certain contexts, and if you remember it happened today, where the DAX got real weak and was making lower lows before the NASDAQ and the ES, I told guys this is generally a divergence to get you to scratch your head, but in the context of this real slippery slope and this real good weakness we have today, I wouldn't be buying the ES based on this divergence. I think it's going to follow it, and it does, and it did. So there's different days and context where divergences are fades. And fading is good, and divergences is a time to start to qualify your fade opportunity, especially if you can line it up in an area of resistance. And people are looking for qualification moments. So let's just say you have a resistance level in here, okay? Let's just say you got a resistance level around 60 even in the S&Ps, and it lines up with a nice divergence with the NASDAQ. That's a good way to build out the story to sell the damn thing. So if you're wrong, you don't have to get, you know where you're wrong at, but you're not too beat up. You're following your rules and you're following some sort of progression of thought that makes sense because you're comparing and contrasting. All right, let's get rid of these lines and move on to another example. And I encourage you guys to do this when you're sitting. See if you could spot it without having to look too hard. I could spot these without looking too hard. You know why? Because I just look at the high and this high. Then I'll bring this chart down below over until my two vertical lines line up, and I know I'm in the same period of time. Here's another one. You see this high right here? Doesn't get breached. But look at the NASDAQ. It does breach this one, although it's pretty close. You do it on the lows too. These lows look the same. See how these two charts look the same? Here's a good one. All right, I got lost. There we go. See, when the vertical lines come back, you know, and you're in the same moment in time. Here was a good one. Take a look at this. Let's put the lines in here. Vertical line, vertical line. We'll put a intersection, intersection. So take a look at the two intersections here. This one right here is the NASDAQ. This guy down in here is the ES, right? Look at when the ES makes a run at the low. It doesn't breach it. But take a look at the NASDAQ. It breaches it. It's another moment to say that this guy has gotten overextended and maybe getting cheap. If you had some support around 50 even in the ES, that's the moment where it might turn. Usually the cause of this is it attacks a particular swing low, gets people who are long stopped out, and then it could go up. Make sense? Let's look at one more. I bet you that this is one right here. Right here. See this low right there? I don't know this for a fact, but I bet you that this is a divergence. Whereas the market right down in here goes through the intersection. All right, well, let's take the NASDAQ, wait for our horizontal lines to, or vertical lines to line up. Then we know we're in the same moment in time. You're going too far. 343-1006. I'm wrong. I just guessed that this would be a divergence, but it's not. You see how these look the same? I figured we had this market come down, come up, fail to make a low, but it didn't. It made a low. These two markets look alike. So you would have trouble distinguishing strength from weakness if you're only comparing these two markets. It's like going shopping for a car. One dealership has the car $65,000. The other one has it $65,000. Which one's cheap? I don't know. They look the same. Oh, okay. You're not going to get a visual clue every single time. They almost look like they're the same chart. One more. I bet in one of these sequences there'll be a interesting here. Look at this. You guys that like macro plays, you should be looking at this day over day on longer time frames. Look at this. See a difference? Not just here, but this market never gets below that intersection. This is the NASDAQ up in here, right? Never gets below there, even though the ES spent some time below there. So it was tough to follow through. They kept coming back, kept coming back. Then it crosses over from one day to the next, so you got to be careful. This can't be the only thing that you use. Sometimes it can be, but you got to be really careful. The point I'm trying to get across is this has got to be one thing that you have to be privy to in order to say that you're on your way to being consistent. You have to eliminate this as something that you don't understand. One of the most important. You're not going to be able to follow other markets to try to get yourself into a trade unless you can look at charts and see when they are opposite. I remember sitting next to, this was just a slide over moment, literally 16, 17 years ago. I started almost 17 years ago to the date, April 24, 2000 was when I started. Soon after that, the owner of the company was also trading equity, DAX and Euro stocks, because the equities were busier in 2000, early 2001 than treasuries were. Most of the firm, half the firm was trading boom bobble shots, the other half equity futures. He said, let me show you something. And my desk, we were kind of in a square. This was an aisle to walk out of, and there was desks around the perimeter of this square. My desk was right here, and there was a trader here, and a couple here, one here, and the owner was right in here. And he said, let me show you something. And I slid over, and he was showing me what I'm showing you guys. It's like, you see when this one makes a high, and this guy comes close, can't get through, and then this guy makes a high, and this one runs through, even though this one didn't. This one's probably overbought, and you're probably getting people stuck long in this guy up here. And it can't go, it can't go, it can't go, it can't go. As soon as the strong one gets weak, look out below. Probably took less than 5 minutes. It stuck with me. Hopefully this is sticking with you guys. It's recorded. It'll be uploaded in a few hours. If you guys have any questions, ask them. If not, I'm going to end the recording. Make sure you're watching markets dome next to dome next to dome, but also reviewing this way to try to find out moments when they diverge.